Everyone is shouting about geopolitics, sanctions, and American power. Almost no one is asking the only question that matters to Indian investors. Does this help or hurt our markets? Let me say this up front. The United States tightening its grip over Venezuelan oil is not a tragedy for India. It is, in fact, a quiet positive. And the stock market understands this far better than television debates. Venezuela has the largest proven oil reserves in the world. Yet for years, that oil has been trapped under sanctions, mismanagement, and political chaos. When the United States effectively brings Venezuelan oil back into the global equation, even partially, the single biggest impact is psychological. Markets start believing that oil supply is not as scarce as feared, and for a country like India, that belief alone is powerful. India imports nearly all the oil it consumes. Do not control prices. We suffer them. So when global oil prices stop behaving like a runaway horse, India immediately benefits at multiple levels: economic, currency, and corporate. Lower oil prices mean lower inflation. Lower inflation means less pressure on the Reserve Bank of India. And when the RBI does not have to fight fires, capital markets can finally breathe. This is not theory. This is arithmetic. Fuel touches everything: transport, power, fertilizers, packaging, even your toothpaste. When crude softens, margins quietly expand across the economy, without companies doing anything heroic. That is why markets often rise even when the news headlines sound grim. Now here is where many investors get it wrong. They assume oil geopolitics only matters to oil companies. That is lazy thinking. Upstream oil producers may not cheer falling prices, but the Indian stock market is not driven by a handful of oil drillers. It is driven by consumption, manufacturing, logistics, aviation, chemicals, and financials. All of them prefer stability over drama. What America has effectively done is put a soft ceiling on oil prices, not crush them. Just stop them from exploding every time there is a rumor, a missile, or a speech. And markets love ceilings. Does this mean oil will become cheap forever? Of course not. Does it mean India is suddenly energy independent? Absolutely not. But it does mean that one of India's biggest macro risks has been slightly defanged. That matters. Here is the deeper point most investors miss. Markets do not need good news to rise. They only need less bad news. Venezuelan oil coming back under American oversight reduces uncertainty. Reduced uncertainty raises risk appetite, and rising risk appetite finds its way into equities, whether people like it or not. So while commentators argue about morality and power politics, the Indian stock market is doing what it always does. It is quietly discounting a more stable energy future. This is not a reason to speculate wildly. This is a reason to stay invested, rational, and selective. The big money is not betting on miracles. It is betting on reduced friction. And right now, friction just went down a notch.